All right, let's jump right in. Picture this. The entire market, and I mean everyone, is just holding their breath. On one side, you've got Nvidia, about to drop the single most important earnings report of the year. And on the other, the Federal Reserve, ready to release the minutes from its latest meeting. It was a day of massive signals, a real tug-of-war between tech euphoria and cold, hard economic reality.
So here's the big question, right? In the middle of all that chaos, with the fear gauges going haywire and experts shouting from every direction, how do you actually find the signal in the noise? How do you make the right call when it feels like the whole world is panicking?
Well, today we're going to do something cool. We're going to go inside an analysis from the team at philstockworld.com that did exactly that. We're going to break down how their unique approach, this incredible mix of deep human expertise and some of the world's most advanced AI, helped them not just navigate the chaos, but make an almost perfect call. It's really a fantastic example of the kind of in-depth work they do every single day.
First things first, we got to set the stage. Because leading up to Nvidia's report, the feeling on Wall Street wasn't excitement. No, not at all. It was pure, unfiltered panic.
The whole thing kicked off with a company called CoreWeave, a really key player in AI infrastructure. They announced some construction delays, and the stock just cratered, down 26%. The market saw this as the canary in the coal mine for the entire AI sector, and that sent shockwaves everywhere. You saw the NASDAQ drop, Bitcoin lost something like $600 billion in value, and the VIX, Wall Street's fear gauge, just spiked. The chatter was all the same. The AI party is over.
But in the middle of all that fear, Phil Davis from philstockworld.com was telling a very different story to his members. He laid it out plain and simple. CoreWeave's problem, a deployment lag, wasn't Nvidia's problem. He saw the panic for what it was, a massive overreaction, and frankly, a buying opportunity. And his call was dead on, even predicting the QQQ would find its bottom right at $600.
So how'd they do it? How do you go from that contrarian call to absolutely nailing the Nvidia numbers? This is where their process gets really fascinating. It's this incredible collaboration between Phil, a market veteran Forbes calls a top influencer, and his team of AI analysts like Bodie McBoatface, their head market researcher, and Warren 2.0, an AI that brings in all this amazing quantitative nuance.
And this slide right here is the perfect example of their secret sauce. The team's AGI researcher Bodie McBoatface, he initially came in with this data-driven case that, hey, memory chip prices are going up, that's going to squeeze Nvidia's profits. But Phil, with decades of supply chain experience, saw the flaw instantly. He pointed out that Nvidia isn't a victim of the memory shortage, they're the cause of it. They have all the pricing power. Then you get their specialist AI, Warren 2.0, who comes in and adds these critical layers of nuance. He corrected the assumption that China revenue was zero, pointing to existing export licenses. He highlighted how everyone was sleeping on Nvidia's recurring software revenue, and this was huge. He pointed out a gamma wall in the options market. Basically, a structural reason that would make it super difficult for the stock to rally much past $200 no matter how great the news was.
So, the team had their thesis locked in. A solid beat on earnings, but probably a pretty muted reaction from the stock. Then, at 4 p.m., the numbers dropped.
And the results were, well, just stunning. I mean, look at this. The Phil Stockworld team called the earnings per share to the penny, $1.30 when the street was way down at $1.25. They called for higher revenue than consensus, and they were right. The only place they were a bit conservative was on the forward guidance, which, as it turned out, was an absolute monster.
And here's exactly why that guidance was so strong. Nvidia's CEO Jensen Huang said it himself. Demand for their new Blackwell chip is off the charts. This was the ultimate validation of Phil's thesis about Nvidia's insane pricing power and that infinite demand from the cloud companies. The whole panic over CoreWeave? Yeah, completely and totally overdone.
Just how big was that guidance beat? This number says it all. Their forecast for the next quarter came in 5.6% higher than what Wall Street was expecting. Now, you have to understand, in the world of mega-cap stocks, a beat like that isn't just good, it's a massive, jaw-dropping blowout. It signals that their growth is actually accelerating. But remember, this was a two-part story. Just as the market was popping the champagne for Nvidia, the day's other big shoe dropped, and it brought a very, very different vibe from the Federal Reserve.
The minutes from the Fed's meetings showed a committee that was pretty divided, but the key takeaway was this. A big group of officials felt that progress on inflation had stalled out around 3%, and they were really against cutting rates again in December. The market had been pricing in another cut, but the Fed was basically screaming, "Not so fast."
And you can see the impact right here in real time. Before those minutes came out, the market was pricing in a 43% chance of a rate cut in December. Just a half hour later, those odds plummeted to just 25%. The message was received loud and clear. Rates were probably going to stay higher for longer.
Okay, so now you've got these two incredibly powerful and conflicting forces at play. You've got a tech giant just firing on all cylinders, and a central bank tapping the brakes. So what in the world does this mean for the market going forward?
This really breaks it down into two competing stories, doesn't it? The bullish case, which is all about Nvidia, says the AI revolution is the real deal, it's not slowing down, and it's powerful enough to drag the whole market higher. But the bearish case, driven by the Fed, says that sticky inflation is going to force them to keep rates high, which will eventually choke off growth and torpedo stock prices.
So let's tally the final score. Let's look at the receipt. The Phil Stockwell team called the QQ2 bottom exactly. They nailed the EPS to the penny. Their contrarian take on memory chips? Proven correct by Nvidia's monster 73.6% margins. Their call that a December Fed cut was unlikely? Spot on. And that stock move? It landed right in their predicted range, all thanks to Warren's insight on that gamma wall. Just an incredible performance all around.
It all adds up to this, an 87.5% batting average on one of the most complicated, high-stakes market days of the entire year. That right there is the power of their analytical framework.
And the big takeaway here really is seeing how this all comes together. The combination of Phil's big-picture vision, Bote's deep data dives, and Warren's quantitative nuance. It just creates a result that's way more powerful than any one of them could achieve alone. It's a whole process of debate and refinement, and it shows you how world-class analysis is built in real time.
So yeah, they absolutely nailed the here and now. But their analysis is also pointing to a pretty significant risk out on the horizon, a potential Jenga tower collapse in 2026, caused by that exact same deployment lag that kicked this whole story off. The question now is, will that be their next big, correct call? And that, my friends, is what makes following these markets so fascinating.